Cryptocurrencies crashed 25% to 50%. Across the board you'll get whiplash just from watching. Overnight and this morning, cryptocurrencies crashed across the board in a spectacularly dizzying way. The craziness of this, and the religious fervor with which these things are being promoted, and what happens when some folks are trying to get out, are taking on ever grander, more exaggerated, and even humorous proportions. So here are the top 8 cryptos by market capitalization, with prices at the moment. There is one thing I can guarantee: by the time you read this, prices will have changed dramatically, one way or the other, in a whiplash-inducing manner. Bitcoin, BTC, with a market capitalization currently of $200 billion, has crashed 23% so far today to $12,121, according to World Coin Index. It is down 39% from its peak of $19,900 on December 17th. Chart via World Coin Index. Note that the prices quoted at different exchanges around the globe vary by a large margin. Bitfinex, the largest exchange by volume, quoted BTC just above $12,000, while CEX, the 6th largest exchange, quoted it about $2,000 higher. So this is pricing chaos. World Coin Index takes the price from different exchanges and averages them out. There is a lot of talk of how traders are just switching from Bitcoin to the next Bitcoin, that they redumping Bitcoin and buying the next Bitcoins, but the next Bitcoins are crashing even more. Bitcoin, with a market cap of $54.6 billion, has plunged 29% so far today to $565.46. And is down 34% from its peak of $860 on December 19th. Bitcoin Cash, BCH, the offshoot of Bitcoin, has crashed 35% today to $2,030, and is down 51% from its peak of $4,100 on December 20th, cutting its market cap to $33.4 billion. Ripple XRP has crashed 35.6% today to $0.76. Just late yesterday it had peaked at $1.22. On December 20th, it was at $0.71. One heck of an up and down trip. 2 weeks ago, it was still at $0.23. Market cap of $29.4 billion. Litecoin, LTC, has crashed 34% today to $206, and is down 43% from its peak 2 days ago, which was when its founder Charlie Lee announced that he de-dumped his entire stake, possibly a very wise decision on his part. Market cap has shrunk to $11.4 billion. IOTA, IoT, has crashed 43% today to $2.68, and is down 52% from its peak of $5.60 on December 19th. Market cap has plunged to $7.4 billion. EOS, whose mind-blowing, record-setting, buyers get nothing ICO, initial coin offering, we featured a couple of days ago, has crashed 33% today to $7.14, and is down 41% from its peak of $12.14 on December 19th. Market cap plunged to $7.15 billion. Has plunged 30% today to $972.43. And is down 38% from its peak of $1,569 on December 20th. Market cap is now down to $7.5 billion. All kinds of reasons are being trotted out to explain this massacre, but there are really just 3 things that matter, and that came together. There is no liquidity in cryptocurrencies, and it's devilishly hard to get out without crashing the price. So when even a modest amount of selling occurs, the price crashes. There is no rational framework with which to value these things, so they cannot be overvalued or undervalued, and the price can go anywhere, and that's what it does. Betting on cryptos is a peculiar form of online gambling on a global scale that requires a consensus among participants that they only buy and that you cannot ever cash out, and now that some folks are trying to cash out, the bets for everyone else are souring. The same dynamics that pushed prices up have reversed and are causing them to crash. Every day, I get a dozen or more emails in my inbox that promote one or the other crypto or ICO. There have been about 170 ICOs so far this year that raised over $4 billion. So this is big money. The promoters, some of them are hired Puerto Rico firms, others are parties related to the token issuers want to get free promos on my site. That's how they operate. They re-promoting the craziest things. And many of them are now promoting the next Bitcoin. These promoters are also paying a ton of money for ads, which have spread all over the internet, including next Bitcoin ads. It doesn't help that the SEC has finally woken up and is starting to crack down. We're in line for some serious regulatory responses to all of this, and that will be forthcoming after the first of the year, Harvey Pitt, former SEC chairman, told CNBC on Thursday. There has already been some action, including blocking an ICO in the U.S. Everyone else is investing in it, and the price seems to be going up, Pitt said. That's a real problem because there is a lack of education and knowledge on the part of many of the people who are actually doing the investing. The SEC's impact will be limited because much of the betting is happening in Asia. But their two authorities are cracking down, particularly in China and South Korea, even while North Korea is hacking into exchanges and wallets, and steal what it can. Meanwhile, for onlookers, it's a form of entertainment, a glance at the dizzying, whiplash-inducing wonders of a world gone nuts. David Stockman, a thundering collision is coming to the bond market and yields will shoot up. David Stockman says the combination of U.S. government borrowing and Fed QT is about to collapse the bond market. Here's why. David Stockman, interviewed by Greg Hunter of USA Watchdog. Former Reagan White House Budget Director David Stockman says the central banks realize they cannot keep printing money at these crazy rates, and by that I mean the bond buying. Now, they are going to begin to normalize and shrink their balance sheet. By the fall of 2018, the Federal Reserve, will be shrinking their balance sheet by $600 billion a year. What that means in plain simple English is that the Fed, are dumping $600 billion a year of existing bonds into the market, just as Uncle Sam will be attempting to borrow $1.25 trillion more. Now, if you don't think that is a financial collision waiting to happen, then I am not sure what would be. We are heading for a thundering collision in the bond market that will drive yields upward far more than the market is expecting. The stock market operates on the illusion of permanently low interest rates. When interest rates start to rise, everything is going to come apart because cheap debt has been priced in forever, and we are heading for far more expensive debt. Bond prices are going to collapse when yields begin to rise. Stock prices are going to collapse big time when the underlying predicate of cheap debt, massive stock buybacks and M&A deals, and everything else supporting the market today finally reverses. So, we are going to have deflation in the canyons of Wall Street, and that will not be a happy day.